Good morning to all of you. It's a great pleasure to host Q1 and FY18-19 conference call of South Indian Bank. And today we are joined from the management, Mr. V.G. Matthew, the Managing Director and CEO of the bank, Mr. K. Thomas Joseph, the EVP of Operations, Mr. G. Shivkumar, EVP of Credit, Mr. K. N. Raghunathan, EVP of Treasury, and Mr. C.P. Girish, the CFO. I now hand over the call to Mr. Matthew for his opening remarks. Thank you, and over to you, sir.
Thank you. A very good morning to all, and thank you for joining us for Q1 of FY18-19 earnings conference call. Let us discuss key highlights of operational and financial performance now. As on June 30, 2018, total business for the bank stands at 1,28,652 crore, an increase of around 14% YOY. Advances grew by 19% YOY to 56,164 crore. The growth drivers continue to be MSME loans, mortgage loans, agriculture advances, and auto loans. MSME grew by 21%, agriculture by 14.2%, mortgages by 66%, and auto loans by 31%. As for deposits, the increase was 10.2% YOY to rupees 72,488 crore, and CASA of the bank increased by 1,297 crore to 17,883 crore, registering a growth of around 8%. CASA now stands at 24.67% of total deposits. Bank's net profit for the quarter was reported at rupees 23.04 crore as against 101 crore for the same period last year. Pre-provisioning operating profit stood at 290 crore for the quarter. Other income was 146 crore for this quarter as compared to 219 crore in Q1 FY18. The decline in other income and was mainly due to the reduction in the treasury trading profit by 73 crore during the current quarter as compared to Q1 of FY18. Further, during the previous year, we had 80 crore of other income by way of sale of PSLC, and 1/4 of the same was recognized in the first quarter. In the current quarter, there was no market for the same. Net interest income stood at 494 crore for the quarter, up from 461 crore for the corresponding quarter of last year, witnessing a growth of 7%. NIM for Q1 of this year is 2.60%. The decline in the net interest margin was mainly on account of the increase in the interest rates on the deposit front. We have already addressed the issue by increasing the MCLR by 25 basis points, and since a substantial portion of the loans are carrying one-year MCLR, the reset happens over the next 1 year, and therefore the benefit of this will really accrue in about 6 months' time. There was also a decline of 9 basis points contributed by the interest reversal on NPAs. The operating cost has increased by 23% YOY, mainly on account of charging off the entire deferred expenditure towards gratuity liability, amounting to rupees 20 crore in the current quarter. The cost-income ratio has gone up this quarter, mainly on account of the above charge-off and the decline in other income on account of lower trading profit. The provision for non-performing assets is 174 crore during the current quarter, and we expect a credit cost of 1% for the whole financial year. In the current quarter, we had absorbed the entire MTM provision on investment deferred as of the last year end, amounting to 34 crores. our investment books stood at 18,879 crore, of which STM contributed 14,822 crore, AFS 4,021 and HFT 27 crores. Gross NPA stood at 4.54% versus 3.59% for Q4 of FY18, and net NPA stood at 3.27% versus 2.60% for Q4 of FY18. The NPA has increased due to slippages in the corporate and MSME book. The corporate slippages were around 308 crores, and the other side, the MSME, other retail and agri added together was around 298 crores. We would like to highlight that in the corporate slippage, we don't have any case of slippage in the large syndicated or consortium loans. The only large account in this particular quarter which has slipped, 105 crores, is for a social infra project, is more on technical grounds of possibility of non-achievement of DCCO, and therefore on the principle of inherent weakness, we have gone ahead and classified it as NPA. Similarly, the cashew sector in India, in Kerala, is particularly facing stress, and although they have significant amounts of receivables, both domestic as well as export, two accounts found it difficult to meet the cash flows on time, and therefore we have decided to make it as NPA, again based on the principle of inherent weakness. This is adding up to 117 crores. One EPC contractor, which is under restructured standard, also has slipped 22 crores, and this is because of certain balance sheet observations by the adverse observations by their statutory auditors, and therefore again by the principle of inherent weakness, we have classified the account as NPA. During the year, we expect a total accretion of NPAs to the extent of 600 to 700 crores going forward. For the next 3 quarters, we expect NPAs to be 600 to 700 crores. In the normal situation, it would be 600 crores, but we have another medical college which is facing a legal challenge at the moment, and depending on the outcome of the legal challenge, this account will become NPA or continue as standard. If it doesn't slip, it will be around 600 crores, otherwise it will be around 700 crores. And we had a strong recovery performance all along. We used to recover around 350 to 400 crores in a year. This year, with added retail and MSME accounts, which are actually quite recoverable, we expect the recovery target to be not less than 500 crores. Therefore, there would be significant moderation in the NPA position towards the end of the year. Provision coverage ratio stood at 39.1%. Our capital adequacy stands at 12.2% for the quarter. The core CRAR is 10.1%. As on date, the total employee count stands at 7,690. During the quarter, bank had opened 4 ATMs and 1 extension counter. We now have 855 branches, 56 extension counters, and 1,386 ATMs. During the quarter, we have won HUDCO award for the best performing primary lending institution of HUDCO under Credit Link Subsidy Scheme and National Payments Excellence Award 2017 for RuPay. With this, we open the floor for questions, if any.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone wishing to ask a question, please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. first question is from the line of Sonal Kohli from ENR Advisors. Please go ahead.
Thank you, sir, for this opportunity. I have two questions, both pertaining to same topic. We have seen a significant addition in bad loans in the SME book. Could you let us know what would be the contribution of the top 10 accounts to this SME bad loan addition? Secondly, the RBI came with these new guidelines last quarter. So whatever, stress one would have expected in the last quarter. So what changed actually in this quarter for a sudden change in the SME bad loan book, considering it would be spread across very large number of accounts?
I don't have the data of the individual accounts in MSME immediately, but I have it. But I can only tell you that this is top 10. Am I able to get from this? No, that won't help. Okay. So it is reasonably spread. And again, about 100 crores of MSME accounts, which took advantage of RBI dispensation of deferment, they came into the slippage this quarter. Going forward, that would definitely moderate because it is now already moderated to 50 crores. Now, if you see the distribution, trading firms accounted for 59 crores, textiles accounted for 38 crores, food processing accounted for 36 crores, professional services 20 crores, engineering 17 crores, metal products 16 crores, leather products 11 crores, contractors 10 crores, other manufacturing industry 13 crores. This is the rough breakup of the 226 crores.
Okay, sir. In case I wanted to ask you, were we surprised with this, or were we expecting this, kind of bad loan addition, considering, this RBI dispensation was supposed to come back, and considering, if we were expecting it, why not talk about this in the previous calls? And if you were not expecting it, what happened? How did it change? Why are you confident that this will not again happen in the future quarters?
Yeah, so there are 2-3 things. One, of course, as I mentioned, there is no, so far the main problem that we were facing was the large corporate slippage. That book has completely stabilized. And as I mentioned, the largest part of that particular book is very well rated. So therefore, and this is the first quarter, maybe in several quarters, that we have seen that there is absolutely no slippage from the syndicated loans and the consortium advances, which are in the top of the corporate book. Now, as I mentioned, this social infra project, which is a medical college in the making, and the cashew accounts, actually they were, as I mentioned, in the case of social infra project, there is a DCCO issue, but even now it has not crystallized. So obviously there was time for the company to do that, but if you apply the principle of inherent weakness, we thought it would be more advisable to clean it up completely on that side. And similarly, in the cashew cases, actually there are 2 accounts which have enough receivables from the domestic clients as well as from abroad. But some of these things are getting delayed, and it is a little difficult for us to ensure that they remain staggered at all times, and it is difficult for us to give any further support also to them, although the state government and others are working on it. But then we thought it would be more appropriate that we finish it off at this point. And similarly about the EPC contract, as I mentioned, on the record of recovery, there is no problem. But then our understanding is that it is NPA in another bank, and therefore, it appeared to us that the best thing is to make it NPA in our book also straight, and then avoid any further, uncertainty about these accounts.
So, sir, what I wanted to ask you was that, considering the SME contribution can not be more than 25 crores in any account, and obviously all the accounts which have gone bad for you wouldn't be of 25 crores, this would be very widespread. it can't be just 3-4 accounts. They may explain, a portion of it.
That's true.
But even if you remove it, it will be very widespread. So what I wanted to understand was what exactly changed this quarter, because whatever RBI guidelines you're talking about, they should have come in force even in the last quarter. So my worry is not about the bad loan addition. It is what it is. What I wanted to understand was why this quarter, why not last quarter, and why was it part of your watch list, or what exactly made you surprised about these bad loans?
Yeah, if you are talking about the MSME slippage, we don't maintain a watch list for them because many of them are relatively smaller entities, definitely less than, say, 20 crores in that kind of range. And we don't maintain a watch list on that, although we have an SMA report, and in that sense, we have a monitoring mechanism about it. But in terms of a watch list maintenance, we don't do that. Now, MSME slippage, as I mentioned, the question is about, 100 crore part is very clear. I mean, it is distributed among a large number of accounts that we will give you the total number of accounts adding up to the 226 crores separately. But otherwise, there is nothing, by which, we can say that this is going to slip in this quarter or the next quarter. Because whatever was to be taken by the recorder recovery, because every day our NPA recognition is on a system-based daily recognition, and therefore there is no interference of any variety. So whatever is becoming NPA becomes NPA, and we deal with that. If there are cash flow problems, which some of these sectors are definitely facing to some extent, particularly migrating to the GST, there is definitely a pressure on them, which is what has caused this difficulty. And going forward, I'm sure it will become, much better.
Thank you, sir. This is very helpful, but I think, everybody else on this call would have this question, what makes you confident about the future? So if you can address it right away, in terms of additional measures you have taken or the additional handle on the SME book you have after seeing this bad loan addition, this will give a lot of confidence to all of us, and I'll appreciate your, reply on that.
Right. Now, there are 2-3 things that we have done. In the last 3.5 years, we were working on 2 areas. One is addressing the large corporate NPAs, which had created a very heavy burden on the bank. So systematically we were addressing that. Simultaneously, we were building up a retail book using our strengths in the MSME, agri, retail areas. Now, what kind of measures have been, introduced for improving the credit underwriting as well as monitoring, I can explain briefly. The entire credit processing in the bank, other than gold loan, for all varieties, including agriculture today, is on a centralized platform. Now, this was not the case till a year back as far as the mid-corporate is concerned. Now, even the mid-corporate is fully onboarded, and similarly, even the retail loans in the business segment, that is even up to 2 crores, even those small accounts are all getting done only on a centralized platform. Similarly, the corporate, the mid-corporate, agriculture, everything is on a centralized platform. That is one side of it. Secondly, we have a very strong centralized monitoring wing headed by a joint general manager, and there is a recovery team which is headed by a general manager, and these are the things that we have done additionally to ensure that the slippages are proactively controlled, and secondly, we also ensure that if slippages are there, we are able to recover that going forward. Now, in terms of collection, that is in terms of reaching out to the companies and calling them on time and putting it on, on a regular track for monitoring and recovering, that is also being done on a centralized platform. So a lot of centralized initiatives have been introduced to ensure that the slippages are under control, and whatever happens, we are able to deal with that proactively in time. And the next part of it is when it comes to the committee approach, instead of having individual sanctions, all the sanctions in this portfolio is entirely on a committee-based approach. So a lot more wisdom is going into the sanctions rather than leaving it to regional heads and other individual executives with the power to sanction. So the sanctions have been withdrawn from the branches, sanctions have been withdrawn from the regional offices, sanctions have been brought to the centralized environment, and sanctions are being controlled by credit committees in all these outfits. So there is a significant amount of quality improvement that is possible on the centralized platform today. So these are the efforts that we have made, and I am very confident that these efforts will bring very, very consistent results.
Thank you, sir. And can you reiterate what kind of bad loan addition do you see in the SME book going forward during the year? And is the worst behind us, or would you expect one or two more quarters like this?
See, I mean, there are 2-3 things that we find which are creating a little bit of problem. Some of the companies which are very, very small have virtually closed and following the introduction of the GST, some of them have actually closed their accounts and then moved over to other methods of sourcing finance. Now, as far as the other companies are concerned, they are in the process of getting onto the GST platform in a steady manner. So, coming from the informal to the formal sector, they are trying to increase their on-book transaction, that's a formal book transaction, and then build a business more aligned with the GST regime. So that transition is going on. Definitely there is a certain amount of pressure coming out because of that. But apart from all that, the economy today, we believe that there are opportunities for many of them, and we don't find across the sectors big problem. Other than in Kerala, we find only in the area of cashew, and to a lower extent, maybe in the marine products. These are the only 2 areas where we expect problems today. Otherwise, we don't find a widespread difficulty in the MSME area. And therefore, we believe that the slippages will moderate. I'm not talking about MSME alone. MSME and mid-corporate would be the areas in which we expect slippages going forward, and not from the large corporate area. So there, that is where I was mentioning, we would be looking at around 600 to 700 crores. One account is the one that would make a difference of 100 crores. Otherwise, we are looking at around 600 crores going forward in all the 3 quarters.
Thank you.
Thank you. The next question is from the line of Jay Mundra from B&K Securities. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Sir, question on asset quality, sir, which has clearly disappointed.
Yeah.
And you mentioned there is no watch list for SME segment. So would it be possible for you to share what is the SMA 0, 1 and 2 book for corporate and let's say SME? So that will give some indication as to, what is the level of stress that we have.
We do have that, and it is certainly not a high number, that I know. What is the percentage also we know very well. But at the same time, these are returns which are submitted to RBI. So I am not very sure whether it is, supposed to be given out. So that is the only thing I am not sure about. Once there is clarity about it, definitely we will share it.
So, okay. Sure. And sir, if you can quantify what is the cashew exposure, in total in our SME book, and how much has already slipped?
Yeah, we have the slippage is now in 2 accounts, which is the larger ones, 2 accounts, 117 crores, and 2 smaller MSME kind of accounts.
Mm-hmm. No, sir, what is the total loan book exposure to cashew segment?
We will tell you. Just give us a moment. Yeah. Please.
Sure. And sir, you have put a chart on corporate rating which is above 100 crore. What is the quantum of that book, sir? And this less than BBB, that I believe, which is 5%, is still standard, right? That does not include the NPA book here.
No, it does not include the NPA book.
So this slide 22, what is the, in total number, what is the book exposure of large corporate which has above 100 crores?
Above 100 crore, it was 9,400. That is the number.
Sure. And why? So because this rating...
9,041, 52 accounts and 9,041 crores. Sorry, yeah.
Sure. And you, you see this 5% book which is, let's say, roughly around 500 odd crores. You do not see any stress in less than BBB rated corporates here?
As of now, we are not seeing. We do talk to the promoters. We do talk to the other banks. In fact, in today's situation, if it is a consortium or syndicated debt, it is not just what our own recovery standards that would be relevant. It would be very relevant whether the account is comfortable in other banks too. So far, we constantly check all the information through CRILC and other data, and also by talking to the promoters and others. So far, we have not been able to identify a concern on that.
So it would be safe to say that this book is not in SMA bucket also, right? This is performing as good as other standard account. This is not even in stress.
No, it is not in stress at all. It is not in stress at all.
Sure, sir. I'll come back in the queue. Thanks.
Sure.
Thank you. The next question is from the line of Kunal Shah from Edelweiss Securities. Please go ahead.
Yeah. So now, given this kind of a...
Sorry to interrupt, Mr. Shah. Sir, can you speak a bit louder? We're not able to hear you.
Yeah. So, looking at this kind of a stress in SME book, how do we see the overall growth? So, are we now getting pretty cautious in this segment? And over last 1 year, when we look at it, it's like growing at more than 20-odd%. So, would it be a conservative stance on the SME side, and we should see the moderation in the growth in this segment?
Rather than moderation, we would be looking at selection and higher quality in terms of processing and control. That is what we are trying to do. I think what is really required is 20% growth is certainly not a growth which, onboards too much of risk because of the growth rate as such. But what we should be careful about it is which we are doing also. If you ask me, in terms of cashew, we have not done any serious, exposures in the last, 3 years, except very, very selectively, where the conduct is absolutely good. We know that, all the records are fine, the export records are fine. So basically these are, accounts with a particular vintage. These are the ones that have fallen, and therefore we believe that our current standards of credit underwriting, processing, and also monitoring are good enough to ensure a reasonable stability at 20% growth, without any doubt.
Okay. And in terms of the internal ratings with respect to SME, so how would that be distributed? The way we had given it in terms of the corporate, would it be possible to share it for the SME segment as well? And from which bucket have we seen this kind of a slippage? Hello?
Hello, members of the management team.
Definitely, we will try to give that information above 5 crores separately. I know that the presentation carries only 25 crores and above. That is the corporate book. Yeah.
Yeah. So maybe overall in terms of the rating profile.
We will do that. We will because we have a rating for all these accounts, internal rating definitely, and some of them external rating too. We will definitely share that information.
So have we seen the downgrades in this SME segment before they actually slipped into GNPL? Where internally we saw the downgrade from one bucket to the other, and then finally we saw...
There is the SMA 0, SMA 1, SMA 2.
Yeah.
That's what happens. Actually, in the case of the relatively smaller accounts, that kind of, they are all basically, SMA 1, SMA 2 kind of scenario sometimes. And then we try to, keep on recovering. And it is basically a small cash flow issue for a large number of them. But then we are also a little bit, extra cautious and conservative. We don't accommodate them in any other manner by giving them additional loans and facilities. So our view is that it is better to maintain a very strict credit discipline in the MSME sector as we grow there. And therefore, if somebody gets into a cash flow problem beyond a particular level, we won't be able to support. That's what happens there.
Okay. Okay. And lastly, in terms of this entire SR book, so today we are carrying almost 20% provisioning. So here we are confident maybe not requiring any further provisioning. Is it doing well, or we will further see maybe some kind of an issues in terms of the provisioning?
Yeah, the entire SR book, may not be the most important part there. If you ask me, the total value is 1,046 crores. The 1,311 crores is the face value.
Yeah.
And of that, what is really important is around 1,009 actually, maybe there's some recovery in that. Maybe it is more like 950 crores or something. That is the one which represents a large amount of sell-off that happened in FY17. 1,776 crores we sold out in FY17. Now, that is the book, on which, the depreciation of 252 crores happened in last September. So today, as I was always highlighting, that book carries more than 50% provision.
Okay.
And one of the reasons why I think the value came down was that, many of these accounts have gone into the NCLT regime, IBC regime. Therefore, there could be, there was RBI guidance itself saying that 50% provision is required. So possibly the recovery value was, considered very conservatively in that case. But as the resolution happens, obviously there will be more comfort coming is what I believe. 50% is already there. And, we will know only when the external rating agencies handle that. Otherwise, from the ARC, we know that they believe that this particular 50% provision that we are having is good enough by any standards. But the rating agencies, external rating agencies, decide what would be the number.
Okay. So this NAV would
Sorry
have
to
been...
interrupt, Mr. Shah.
Yeah, sir.
Sir,
Yeah.
may we request that you return to the question,
Okay.
please?
Yeah, sure. Yeah. Thank you.
Thank you. The next question is from the line of Rohan Mandora from Qtr Securities. Please go ahead.
Sir, thanks for the opportunity. So just carrying forward the stretched account piece, so it would be helpful if you could give us some color with respect to what is the outstanding loans in, say, the SMA1, SMA2, SMA0, as well as in the next 6 months, like what projects are there where the DCCO is expected. So basically, the reason for that is that in terms of the guidelines that we are giving and in terms of the 600 crores of fresh slippage expected over the next 3 quarters, how much of that could come from these books and what is our expectation from outside of these pools? So just to get an understanding on that.
SMA, as I was mentioning, while we have the data and we have to submit it to RBI periodically, I am not sure whether it can be shared. That is only concern here. So if I can share it, I will be able to share it later. But if you ask me about the DCCO cases, in the 600 crores that I am talking about, there is no DCCO case involved at all. In fact, I don't think we have any project where that's already slipped. That is the only case where there was a DCCO issue. We have already made NPA.
Okay.
Yeah.
Sure. And sir, like the accounts and the 2 cashew accounts as well as the social infra project account which slipped in during the quarter, what would have been its internal rating at the end of, say, March quarter?
Yeah, they had internal rating. One of them, of course, is a project under implementation. So obviously the rating does not have too much of, meaning because it's a different rate. It's a project finance rating that is coming in there. There it is all about whether the company is able to achieve the target, and the company has been showing a lot of progress. It's not as if there is no progress. But there are also certain legal related issues which we believe can create a problem. It's quite possible that they will even come out of it. So we really don't know. But in any case, it is very difficult for us to accept that there is no inherent weakness at all at this point. And rather than carrying it on and again facing a problem later on, it is better to finish it off is what we thought. And then, of course, if there is an upgrade possibility, we will deal with that later.
Okay, so it's not possible to share the actual internal rating like SB BBB or SB BB plus what we would have assigned to these accounts at the end of March quarter? Would it be possible to share that?
March quarter, there may not be anything because it is on the basis of our audited balance sheet only we can do that. So, obviously, what we are having is the previous rating, or if it was, below a particular rating, then there would be a 6-monthly rating for that. These are the two things that is available. We will share that data. Okay, we'll share that data separately. Yeah, please.
Like last year, we had recruited around 160 odd branch development officers in order to source CASA, cross-sell, fee-based activities.
Right.
But sir, if you look at the traction and the fee income as well as on CASA, the growth has not been materially good. So even year-on-year, the core fee income growth was almost flattish. So sir, if you could share how is that piece progressing in terms of the fee income and other cross-sell CASA?
Correct. What you said is right. If you look at the numbers YOY, certainly it is not good, and nobody is saying that 8% CASA growth is appreciated. But then on a quarterly basis, sequential basis, if you look at, I think the CASA has already grown by around 4%. On that, again, SA has grown by 6%. So obviously, there is a lot of traction on the SA side, and these business development officers are being deployed very effectively in many branches. Of course, the number is not very, very high, but these people will definitely define the kind of growth that is likely to happen in these areas. Only one problem is some of these initiatives are fairly new, and it is definitely a fact that there is a stabilization process that is going on, because we didn't have anything like a marketing kind of executives in the bank earlier. So obviously, this is the first time that we are doing it. But there is a certain vertical available for that, and people are really in the field, and things will definitely improve from here on those areas.
Right. So, sir, like, when can we expect results from these initiatives? During FY19 or FY20?
FY19 itself, we definitely expect growth, and by FY20, I'm sure it will be much, much better position coming out of that. But even in FY19, we expect significant amount of growth coming on the liability side and on the cross-sell side.
And so lastly, what would be the cumulative provisioning coverage on NCLT list 2 at the end of the quarter?
NCLT list, there are only 2 accounts with us. And we are required to have 50% provision, and we have. Let me just have a look at the number. So,
yeah, because we had one unsecured account, if I'm not wrong. So there we would have taken the risk.
I'll come back on that, but what I'm having is at the moment there are only 2 NCLT accounts adding up to 336 crores, and we are already carrying 50% provision as required.
Sure.
You were mentioning something about an unsecured account. I'm not very. Where are you looking at in the same?
It was mentioned in the previous con call that in NCLT list 2 we have one unsecured account where we had to take provision to 100%.
No, we have. Okay. That is all. I mean, that was not NCLT account. It was a pharma packaging account which was coming in a divergence, etc. It is not unsecured. RBI, although had classified it as unsecured, actually it was carrying full security, and we don't have a system of taking any exposure on unsecured basis, except in the case of AAA accounts alone. There is no other case, and that too on a very short-term basis. Otherwise, we don't take any unsecured loans at all. Anyway, that account is completely provided for, and sold out also. Maybe last December we have done all that.
Okay, fine, sir. Thanks a lot.
Thank you. The next question is from the line of Ramesh Bhuva from ICICI Securities. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, a couple of data points. So, one is, what is our total NCLT 1 and 2 exposures?
We have only NCLT exposure of 336 crores accounts which are already referred to NCLT. There are only 2 accounts left on our book. That is 336 crores, and 50% is already provided for on that.
So these 336 crore are already NPA, or these are standard account as on date?
No, these are all absolute NPAs. There is no standard account.
Okay. And so you are saying that the 336 is the total NCLT exposure you have, right?
Exactly. Because what has happened is in the 1,776 crores that we sold out, there is a significant amount of NCLT accounts. So therefore, you don't have, at that particular point, of course, NCLT, IBC was not involved, but subsequently these accounts got referred to under IBC. And today, what is in our book, we are having only 2 accounts of which is 336 crores, and they are NPAs for quite some time.
Okay, and 50% provided, right?
Absolutely, that is required.
Okay. And so secondly, on SME part, so since we operate largely in Kerala for SME book, so what kind of stress are you seeing in the SME portfolio per se? Is there, a business overall has got impacted, or there are a few segments, which is facing the issue, and how we are, protecting ourselves by, keeping the slippages lower in that portfolio? What's the broad strategy adopted by management to tackle with these, SME issue?
Yeah, there are 2 things. One is, even geographically, it is not as if, only, we are a Kerala-focused MSME bank. As far as MSME is concerned, we are growing exactly in line with the branch distribution. For example, our Delhi region and Ludhiana branch, etc., contribute significantly or are significantly to MSME as some of the regions in Kerala too. But because we got about 10 regions in Kerala and more branches in Kerala, yes, a larger share definitely comes from Kerala as of today. But the point is, it is not only Kerala-centric in MSME area, but what are we doing about controlling the risk in that area? As I mentioned some time back, the underwriting standards have been improved by centralization process. Today, no branch manager can sanction any MSME loan. Only gold loan he can sanction against gold security received in the branch, if at all he is interested in doing that. Otherwise, even a home loan he cannot sanction.
Yeah, so branch manager, regional manager are not having any sanctioning power, right? So it's all centralized.
Absolutely centralized. And again, it is not as if one individual is sanctioning. Most of the sanctions are only through committees. Of course, very, very small ones, individual executives may be given power at the centralized outfit, and with the supervision on that. But otherwise, it is all committee approach. So these are the 2 things in terms of, underwriting. And second, at all times, there is an orientation towards risk control by spreading the exposure. So if you ask me whether, a cashew account of 50-60 crores we will take today, we certainly won't take. So we are very clear about it. So today what we are doing is, if it comes, we say that, another like-minded bank will have to be there. We will take maybe 25-30 crores.
Right.
This is another way of risk control.
Right.
And the third one is, at all times we take a large amount of collateral security. In our desire, of course, in the case of trade and areas where, there is a higher perception of risk, we invariably insist on collateral security almost to the extent of 100%.
Right.
So these are definitely helping us, and that is why Kerala-based accounts, where we are able to get this kind of collateral security, even if the exposure is a little higher historically, we are not particularly worried about it, because in terms of their skin in the business, it is a lot more, and in terms of our recoverability, it is much more.
So basically, when we say collateral, so typically in trade, what we accept as a collateral?
Sorry. When I talk about collateral, I'm not talking about security as such. Primary security is the business security. That is all receivables or whatever it is, their stocks.
Absolutely.
I am talking about collateral by way of land, building, and real estate, that variety. Mortgage securities.
Okay. So when we say collateral in SME, we typically means the land and, or maybe physical.
Yeah, it will be like if it is his factory or his house, but there would be a collateral security beyond the primary security.
Okay, and this secondary security will be what, 100% of the exposure, or it will be slightly lower than
we would like to, but at the same time, there are good connections with the bank for a long time. So obviously where the track record is very good, cash flows are very good, such cases obviously we are willing to reduce it to maybe 50 to 70%. But typically in the case of trade accounts, we don't do that.
Okay, right. So let's say if someone asks for a capex, we might accept 50-70, but if it's a purely trade, then we might ask for 100%.
Exactly. That's the whole point.
Okay.
Correct.
Yeah. Thank you, sir.
Thank you. The next question is from the line of Umang Shah from Safe Partners. Please go ahead.
Good morning, sir. Thanks for the opportunity. So could you give a breakup of the 308 crore slippage on the corporate side? So you said 105 crore is the social infra project.
Right.
117 crore is cashew.
Yes.
What's the remaining?
One is the contractor. It's not exactly a large EPC contractor, but it's a sole banking relationship based out of Karnataka. For a long time it has been with us. But again, they have orders and everything, but at the same time, going by the experience of some of the contractors, we were of the opinion that this cannot be sustained for too long. And therefore, we decided on maybe purely going by the record of recovery, it may be standard. But then the fact remains that there is an inherent weakness, so we have decided to make it NPA. Another one is an EPC contractor, which is a very large, south-based EPC contractor, which was restructured deeply several years back, and several banks are involved in that also, and their part of the loan, a substantial part of the loan has already been converted into equity and lying in the treasury book. But then there are, apparently some adverse, notice by the auditors, statutory auditors of the company, and therefore, and again, my understanding is that the account is in PA in another bank. So again, it was felt that it is really not very advisable to continue it. And of course, if things really improve, and if they are able to cure everything, we have no problem. So that is 22 crores. And then various trade accounts put together some 31 crores, maybe one, I think, 2-3 accounts. Only one account is involved in the trade. So
could you give a similar breakup of the 298 crores? On
yes.
The SME slippage?
MSME is 226. Agri is 11 crores. And all other retails put together, including mortgages, education loan, all put together, it is 61 crores.
Yeah, so could you give a breakup of the 226 crore?
Do we have that? Okay, 1 second. Yeah, sectorally, sometime back I mentioned sectorally. So trading firms are 59 crores, textiles 38 crores, food processing 36 crores, professional services 20 crores, engineering 17 crores, metal products 16 crores, leather products 11 crores, contractors 10 crores, other manufacturing industry 13 crores, other service sector 6 crores.
So what kind of a recovery do we see from this 226 crore?
Over a period of time, that's what I was trying to mention. We have been recovering every year around 350 to 400 crores. And this year, the opportunity is a little higher because the slippages are not from the large corporates as it used to be earlier, where there are practically no recovery opportunities, except through IBC and things like that. But here, because there is a significant recovery opportunity, that is why I'm mentioning that I'm very confident that at least 500 crores will come back. So I would assume that, at least about 50% of these accounts, the money can be recovered.
Sir, previously you had given guidance of FY19 slippages being 600 crore, total provisioning being 600 crore.
Correct.
We've got a slippage of 600 crore in the Q1 itself, and the provision of 200 crore, 220 crore, which is analyzed giving 950 crore. So how do we derive confidence from the fact that these one-offs will not occur in the future?
Correct. There are two things that we need to look at. The the 1% credit cost, I think we are roughly on target because 174 crores is the credit loss, if you ask me.
Yeah.
This quarter. So 174, of course, I agree, it is slightly on the higher side, but I'm sure in another quarter it will be slightly on the lower side too. So basically 1% of the credit cost, that is 600 crores we will be able to maintain, is a reasonable confidence that all of us are having here. So that issue is not a worry. Now the other question is, I mean, what we were talking about around 600 crores of slippage for the entire year, but we have it in the Q1 itself. But what is generally not advised in any of our guidance or conversation is that there is a strong recovery platform, which is what we always keep for ourselves as the cushion. So there is a strong recovery that happens in terms of, so therefore in terms of total value of NPLs, there is a benefit for us. And similarly, on the profit side also there is benefit because there is significant recovery money that is going into the P&L account. So these are the two numbers which we keep to ourselves and we don't really, give any guidance on that. So that is a cushion that is available to us for managing the situation. So fine, in this particular case, maybe around 300 crores is because of slightly, aggressive posturing that we have done, because I know that it is difficult to sustain their standard quality without any doubt at all because of the inherent weaknesses involved in some of these accounts. So we felt it is absolutely good. We don't go only by the recovery record, but more by the inherent weakness part of it. So that cleans up that book also substantially. Now, as I mentioned, I mean, we have a reasonable view that 600 to 700 crores would be the slippages going forward in the next 3 quarters, even assuming that, a little bit of pressure which we have seen in this quarter will continue through the year. Position can improve also, but we are not taking that kind of a very optimistic view. We are taking a relatively moderate view on that, and therefore we are mentioning that 200 crores plus would be the slippage, and only one account where we have a doubt whether it will be able to, succeed in the legal challenge. If it succeeds, it's actually a very strongly running medical institution. Obviously, it should be able to succeed, but then if it doesn't succeed, then that is about 100 crores plus. So that is a number that is mentioned as 600 or 700.
So all these 226 crore SME which have slipped, these have been from pre-2014 books, or have they been from the recent books?
All the larger ones are definitely from pre-2014. There is no doubt about it.
Okay.
Very small ones I really can't say. I don't want to say. My hunch and others are also generally mentioning that it may be of that vintage, except maybe we have 1 or 2 accounts. That is more in the corporate. We had 130 crore exposure, which is I would say a very quick mortality case, obviously. There is a possibility of an upgrade also on that, but at the moment, I will call it a quick mortality case. But otherwise, I'm not seeing, any serious problems coming from the accounts which are particularly done through the centralized platform and on the committee approach.
Yeah, so on the advances front, our advances are growing at 18-19%. Our capital adequacy is at around 12%. So if there is and the price right now doesn't allow us for a good QIP, so what's your sense? I mean, will you wait for the QIP? Will you compromise on growth going forward? How do you see this risk mitigation further?
There are multiple opportunities. We will explore everything. Of course, there is always some room for tier 2. That's also available. But we look at all opportunities. Only thing is that the board has not taken a decision on the exact way of going about it. Therefore, I am constrained in discussing that.
Okay. So final question on the yields front. Do we see any pressure on the yields on advances? Because our NIM seem to have gotten compressed.
We do have a pressure on the NIM, because what has happened is, if on the liability side we have paid something like 20-25 basis points during the year, and we have only done that on the asset side just now. Maybe this month 5 basis points, and last month 20 basis points. So what we are talking about is what is done on the liability side is passed on the asset side, but that transmission will take at least a lag of 6 months, because these are all typically 1 year MCLR kind of reset. So which means a real benefit of that will kick in only in about 6 months' time.
So my question was more on the lines of, we are growing at faster rates in the home loan, mortgages and auto loan. So are the yields lower than the other products?
Yeah,
on those retail products?
That also I had to mention, not only there, even in the case of MSME also. I mean, there is always an orientation towards security and safety. There is no question about it. So, I mean, we are putting an extra emphasis on that, and we are willing to compromise on the pricing a little bit for that reason. And again, the market competition is also is also heavy for very high quality assets. Yeah. So, yes, that's what is going on at the moment.
Thank you. The next question is from the line of Sri Shankar from Prabhudas Lilladher Private Limited. Please go ahead.
Sir, good morning. A couple of questions. My first question is regarding...
Speak a bit louder.
Yeah, can you hear me? Yeah. My first question is regarding the slippages that we have had this quarter. Do you think that you will end up with any particular LGD, loss given default, on these assets, or is there anything unsecured, or you think that it is fully covered?
Yeah.
Including the corporate?
Yeah. See, that is where the difference is coming, because this time the slippage is certainly not from the large corporate book, and even the 105 crores, which is the largest, is a religious institution-based medical college. So I don't expect any serious recovery issues there. Money, I mean, they will definitely find a solution to deal with it. So we are pretty much hopeful that it won't lead to any problem. And again, I want to highlight that there is no business which is unsecured in the bank, except very, very minor areas. Otherwise, all the business is fully secured, and also additionally secured by collateral security of land, building, etc. So the LGD cannot be high.
Okay. Second is, with regard to your depreciation or write-off or provisions on your SR, in the provisions, what is the amount that you have provided for any depreciation value of security receipts?
Yeah, total amount also I can mention, but I think the more important one is what happened with that 252 crores, which happened with the portfolio of 1,776 crores that we sold out in March 2017. So total is, face value is 1,311, and MTM provision is 265, and therefore the market value, current market value is 1,046 crores.
Okay. So in this quarter, how much we have provided, sir?
This quarter we have not. There could be a nominal amount, 4 crores.
Okay.
Yeah. Yeah.
And so third is, so you expect the slippages, what we have happened in most of the corporate slippages where you would have a high amount of loss given default is already taken care in the earlier slippages, etc. So in the current slippages and going forward also, I would suspect that you are fairly well covered in terms of security.
Absolutely. That is one small silver line in this particular otherwise bad situation, which I agree. I mean, 600 crore slippage is not what is something we appreciated, but at the same time, this slippage is far superior to what would have happened in an EPC contractor where we have 200 crores exposure or something. This is totally different. These are all totally carrying significant amount of real primary security. But for example, like you finance the medical college means, we are financing building and equipment, which is already there. And then we are talking about taking other comforts by way of, personal guarantees of very important people, etc. So there is definitely a lot more comfort in terms of recoverability.
So this means that probably there is a scope of recovery of these things also. And my final question is, sir, in one of the conference calls, one of the managing directors of a bank had opined that in many cases the security that he has seen for the various corporate lending as the security that they hold are overvalued. And in our case, have we seen any chance that the valuation has been, overvalued in the sense the actual security value is much lower than what is being shown in the books of the bank? Have you faced any kind of a problem like this?
Certainly not. It is, the system is that it has to be valued by a branch executive. It has to be valued by an expert. And then we need to look at distress sale value, and then only any credit process happens on that. And if any overvaluation situation ever arises, there are significant accountability issues for the individuals concerned. And we are very, very clear about enforcing that all the time. And we are pretty much sure that, such cases are very, very few.
Okay, sir. Thank you very much.
Welcome.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, please limit your questions to 2 per participant only. The next question is from the line of Gaurav Jani from Centrum Broking. Please go ahead.
Yeah, good morning and thank you for taking my question. Firstly, sir, some clarity on the slippage number. So I'm looking at a corporate slippage of about 308 crore and the ex-corporate is about 298. So of the corporate, am I understanding this correctly? So one is the DCCO account of 105 crore, 117 crore would be the cashew, and one EPC of 22 crore, and the remaining trading. Is this correct?
One trading is 31 crore, and there is another contractor account. It is not exactly an EPC contractor, but a relatively middle-level kind of a contractor, 33 crores.
Sure.
It's a small banking relationship, not really like the other EPC contractor where it is a, consortium arrangement.
Correct. So next is, if I can have the breakup of the deductions given in a slide in the presentation, it amounts to about 37 crore in the GNP reductions. So can you give the breakup of that?
Yeah, it is cash recovery of 13 crores and upgrades of 24 crores. It's very small compared to what we've been Q1. Typically, it is like that. We are not able to do much in Q1, but we will achieve 500 crores.
Okay, and so no write-offs you mean this quarter?
No, this time we have not done anything. Typically, write-off is done only when we sell assets to ARC. In that context only typically it comes. But there are no such cases in this particular quarter.
Sure. Now, sir, a certain qualitative question from my side. If I look at slide 23, 95% of the large corporate advances you mentioned, there's one section which focuses on that and the other on the total corporate book. Is that correct? That the second section is on the total corporate book, right?
Yeah, one is on corporate book, the other is on 100 crores and above. That is the large corporate which used to be a very problem area for the bank. So what we are trying to highlight is, the problems there we believe are, over. That's, at least in this particular quarter, we don't have any problem.
So, appreciate the information. Just a certain clarity. So, as of now, of the MSME, SME and corporate, what percentage is externally rated and what was it, probably a year back?
We will give you the data. Please note down. Yeah. We will give you that separately, offline. Yeah.
Sure, no problem. So, last question from my side, if I can squeeze in one. Of the total slippages of about 600 crore, so what percentage would have originated from Kerala?
yes, in this particular corporate slippage, barring the EPC and the contracting accounts, all the rest are from the 31. Oh, no, I'm talking about the corporate slippage. I think social infra, cashew. Yeah, that is true. I mean, social infra, cashew, and trade are from Kerala.
Okay, so around 200 odd crore.
Yeah.
Okay, and from the ex-corporate books, about 300 crores. So that's...
Sorry. The social infra is not from Kerala. It is in, in Kanyakumari, which is in Tamil Nadu. Sorry. Okay. So Kanyakumari district. Okay. So always the boundary of Kerala. So it is, so cashew and, only cashew is from Kerala. Others are from, including the trade is from outside and social infra is also from outside. Sorry. Yeah.
Sure. So from the ex-corporate slippage, sir, how much would be from Kerala? I mean, what I mean is the MSME of 226 and the education and all of 61. So
yeah, this is more or less in line with the distribution, the same way as the branch distribution. Both growth as well as NPA are almost in line with the branch distribution. So Kerala will be accounting for maybe around 45, 50, maybe 45%, more like that. Yes.
Sure. Got that, sir. That's it from my side. Thank you so much.
Thank you.
Thank you. The next question is from the line of Roshan Chitty from ICICI Prudential Life Insurance. Please go ahead.
Thank you so much for taking my questions. So firstly, how much of the cashew exposure is there on our books?
Can you please just repeat?
Yeah. Am I audible now?
Yeah, much better, yeah.
Yeah. So how much of the cashew exposure do we have on our books?
Yeah. 410 crores. 415 crores, of which 42% is NPA. NPAs are 174 crores.
Okay. And what about the rest? Are they in the SMA bucket? Are they current?
They are current, and we, as I mentioned, we know that cashew is a stress sector. Therefore, we have gone about it very systematically. Although the state government is doing a lot of work about supporting this, we felt that the receivables may not get realized in time, and we may not be able to also support by giving any additional finance. So, therefore, we have made it NPA in these accounts. Our accounts are absolutely fine as of today.
Okay. And how much is the absolute interest reversal this quarter?
9 basis points is the impact. How much is the amount do we have? 18 crores. 18 crores.
18 crores. Okay. 18 crores would make it corresponding to what? 600 crores slippages also would mean not more than even assuming, okay.
It is right.
10%, 60 crores, 15 crores of, okay, all right. Sure. In line with that. Yeah. So, how many standard accounts do we have in our books which are NPA with other banks now?
There is none. It cannot be. That's the problem today.
None. So, we have recognized everything with this quarter.
We had to go out of the way and make an account NPA only for that reason.
Which is that trading account you said, the contractor account?
It is a large EPC contractor where, of course, our exposure is in the loan book not very high, but in the treasury book it is a very high exposure, yeah, because it was all converted into equity earlier and they are showing now negative mark to market.
Sure. And how many of the MSME accounts, the 226 crore slippages that we saw this quarter, how many of them are less than 2 crore cases and how many 2 to 25 crore cases?
I'll have to give it separately. It's not down. Yeah.
Okay.
We'll give you the data.
And just this question again. One last question, if I may. So these less than BBB cases for us.
Yeah.
So what gives you the confidence that they wouldn't slip any further?
Yeah, because these are our internal rating, and our internal rating takes into consideration a lot of factors. And if you look at external rating, these companies, the level comes down by 50% roughly. Yeah, it comes down by almost 50%. So, but then our rating system, we take various parameters and then take a fairly conservative view on that. And that helps us in ensuring that, onboarding is done correctly. So we are maintaining that. But if you look at the external rating of the same accounts, then the ratio, the percentage comes down by half. Instead of 18%, I think it is around 9%.
Okay, sure. Thank you so much.
Welcome.
Thank you. The next question is from the line of Gautam Behan from Orient Capital. Please go ahead. Gautam, your line is unmuted. Please go ahead.
Hello, can you hear me now?
Yeah, we can.
Hi, thanks for taking my question, sir. Sir, as a fairly long-term shareholder now of South Indian Bank, it seems like one quarter seems a long time in the life of South Indian Bank. Just about 2 months ago, we had fairly decent guidance for FY19 being the clean year, and we're moving ahead from our past problems. We had NIMs of 2.9, NPA was meant to have peaked, provisions would have been 600 crores a year, ROA 1% FY19 at some point, 1,000 crore PAT. It just seems to me that all of this guidance, just in terms of 2 months ago, just seems fantasy now. So, I mean, do you have anything to say to shareholders with that sort of mindset?
So, basically that 1% credit cost remains. There is no doubt about it. Then in terms of NPA accretion, whatever we have mentioned now, coupled with the recovery of around 500 crores is the number that we need to look at. And therefore, we, again, all along the pressure that has been building on the bank extremely heavily was from the large corporate syndicated loan book. That has actually stopped, and that is the most important positive that we are seeing today. And therefore, but one more other thing happened. Like, for example, priority sector lending certificates was a very major opportunity for us last year. And we could get about 80 crores by selling off. And this year we got even more priority sector to sell off. But then there is no market at all for that. And similarly, the treasury could not make anything at all. And on the other hand, mark-to-market provision became very heavy on some of the treasury exposures, including an EPC contractor's case where there was no mark-to-market last year. It was positive, and this year it is significantly negative. So these are the things which have really upset the calculations. Then, of course, this particular quarter's profit is affected by various other numbers which I have mentioned already.
Okay. So I think treasury, we all understand, is out of your control in some case. But
sometimes it will come back also. That's what we believe.
Correct.
It will come back also in treasury.
But this, like, for example, fee and transaction income not growing, which is also a bit worrying because we were on a run rate of 25% up to last quarter, if I remember right.
Yeah, that was all. I mean, actually affected by the availability of PSLC income last year, which suddenly vanished completely. We were actually looking at something like 100 crore plus going by the previous experience. So on that, we got nothing. So what I'm trying to say is that distorts the picture. But if you look at other individual areas, like, okay, it may not be anything great, but Forex has also grown a little bit. If you look at transaction income, it has gone up. All those individual components, when we look at, they have gone up. But then one large piece, like the PSLC has, really brought a negative color to that.
Okay. Sir, I guess I'll just ask finally now. This ROA of 1%, that is this mirage that we're all looking to get to. Is that realistic at all in some quarter in FY19, or do you think this NPA issue, that is this new SME slippage that has come in now, will just make that impossible this year? In some quarter annualized, I mean.
So that's right. I never mentioned it is for the year. It was always mentioned
correct.
as a particular quarter in the year. And I also said there are only two components which are volatile in that. That is the availability of treasury profit, which is not a small one because 250 crores we get in a year. So that is one number. Second is the PSLC sales. Both these things are, I don't know whether the market will change tomorrow. There was a reasonable expectation that these things will continue in the normal manner because we were only going by average standard experience in the past. But that has been completely negated. So therefore, that is the only component that is creating the problem. So I shouldn't say that without having any clarity on either of these numbers today. As things improve, and if there is more visibility about these things, I will again go back to the same argument.
Okay. And sir, I'll ask the last question now. The NIMs of 2.6% this quarter, full year when the MCLR comes in, can you give me a guidance of what the full year NIM is likely to be? Will it be more around 2.8 or is it going to be around 2.6, 2.7?
No. In fact, that is why we are trying to pass on the 25 basis points. Although I agree that there is always a pressure for high quality business, which is all what we are looking at today. But at the same time, based on our service quality, our efficiency, our quick delivery, etc., we should be able to pass on this 25 basis points increase that we have done in the last month. So if that kicks in the next 6 months, the full effect kicks in 6 months, then we should be able to come back to something like 2.8 without any problem.
Okay. Okay. Thank you, Mr. Matthew. Good luck. Thank you.
Thank you. The next question is from the line of Rajat Sedia from Vriddhi Capital. Please go ahead.
Hi, sir. Sir, very similar to previous participant, basically, why don't we provide all of our, stress assets in one go? Why are we taking so much of time? Why is that, one quarter we see higher provisioning, other quarter we see lower provisioning? Why can't we just provide simply, in one year or so, all of the stress that we see? No. It gives very confusing signal to the shareholders or the prospective shareholders.
No, what happens is we can't do that. There is no way, because today, by the system, what is thrown by the system is this. I don't touch that. This is a daily recognition of NPA, which is purely system-driven, except in the case of the large corporates. In the case of the large corporates, of course, we are seeing the account every day. We are trying to figure out whether there is a problem or not. So those cases are done separately. Others are done on a pure portfolio basis. So many of these relatively smaller people, I'm talking about that MSME, Agri, and other retail, there will be slippage, but there will be upgrades too. So today, that upgrade part is not visible at all in this quarter. That is the only problem. But if the upgrade was visible, we would have appreciated that, it is also going down and coming back.
Sure. So is that
we can't upfront that and then say, for example, wherever we could upfront, we have done that. Where we know that we have been carrying some stress and we felt it may not be sustainable, in spite of the fact that, the promoter is making a lot of effort, they have receivables, which may be delayed only a little bit, but then we have decided that we will make it NPA. That's what we have done actually.
So basically you're saying, despite, giving loans to some people, you don't understand, you don't have the understanding whether the account can actually turn into an NPA in the coming quarter or so. It's been more than 3 years.
We are talking about very distributed. If it is above 5 crore, there is a separate monitoring for those accounts. There is another monitoring for 1 crore and above. But then there are relatively smaller accounts where that kind of monitoring is not done. What is being done is from the collection center, they will be calling and talking to them. And then if there is still, that is before the default, they are informed. Then post-default up to 45 days, the calls are made by the collection center. Subsequently, it is passed on to the regional officers and the particular branches for personal pursuit. No, it is not as if these people don't want to pay or they want to close their business. It is not like that. So there what happens is it is a question of, dealing with them on a regular basis and collecting the money. So it's not as if, individual cases, at the HO level, we can follow up in relatively small cases. There is a system-based follow-up that is running, and the branches and the regional officers' function is precisely that.
Sure, sir. Just to follow up on this, so you are again guiding for some 600 to 700 crores of slippages in the next 3 quarters. Like the previous participant also said this, a couple of months back, we were expecting something else. So this takes the total slippages for the year to around 1,200 to 1,300 crores. So where we know about the first quarter, where are you seeing the, incremental slippages to come from? SME, retail, corporate?
So, large corporate, as I mentioned, the large corporate syndicated debt part of it, it is more than 94-95%, at least investment grade, and around 70 or 74% or so is A and above rated. So we are not expecting anything like a slippage in that area. And but then in that relatively smaller corporates, that's 25 crore to 100 crore in that space, there are some accounts in which possibly they can get into cash flow problems, and therefore we are looking at on a portfolio basis. Individual account-wise, if you look at it, only one account I mentioned, that is the only case where we know there can be a problem because we are following it up on a very regular basis. Other accounts, the problems are not something, which is already on record or, it's unmanageable or any of those things.
So, is it the corporate side that you expect?
Pardon me?
Is it the corporate that sorry?
Yes. In our case, corporate means 25 crores and above is corporate.
Right.
So, they are really, actually, more like a mid-corporate kind of thing. There also, what we are trying to do today is, we are certainly not going to 100 crore in all cases. What we are trying to do is moderating that and then taking smaller exposures, controlling it, as I was mentioning, through various efforts of centralization and centralized control, system-based control. So all that we are doing. So there, of course, there should not be any serious problem coming up at all. But in the larger portfolio, because we got a good base of MSME, we got a good base of agri, we got a good base of other retail, there can be problems, but then there will be recovery source.
So what has changed, in just 2 months? That, suddenly guidance has also increased a lot.
So what we are trying to do, what we are trying to do is to see that, it is a little conservative, and with the experience of, the MSME slippage particularly, because the government also has given a leeway of around 100 crores in these accounts. So that also has colored the picture a little bit. So we thought if such things continue, there can be a bit of a problem, and that also has been taken care of. So that is why we have put a very moderate, kind of, estimate going forward.
All the best.
Welcome. Yeah.
Thank you. The next question is from the line of Sangram Iyer from Shubham Ventures. Please go ahead.
Yeah, hi, Matthew sir. It's just a continuation of the questions being asked earlier by participants. Sir, last time when we had a call on May 15th, till then we had the visibility that, the overall slippages could be, 600 crores only. So what actually changed in the last 1 month, wherein, suddenly there is this sharp uptake in the overall slippages coming through, especially even from, the corporate accounts which are in the non-large category, and SME where we were very confident that things are very good and not much issues on the cash flows, etc. coming through. At least in the first half of Q1, we were not things were not visible at least to slip like this. So what actually changed in the last 1 month, resulting in the full year slippage expectation coming in the first quarter itself?
Yeah, I won't say that anything much has changed significantly, but one thing is very clear. Today, there is no tolerance for anything like inherent weakness in the system. So any account, be it even 5 crore or 10 crore, if there is a perception of inherent weakness, that is made NPA first. If recoveries are coming in, we will see later. But first the account is made NPA. So that I would say is, that's actually very consistent with the current regulatory environment. That is what we are trying to do there completely. And then, MSME slippage, we need to subtract about 100 crores which came only out of the pushback from the dispensation that is coming in. So that has really colored. Almost, 50% of MSME slippage is colored by, the dispensation given by the government, which we have to necessarily comply with in the case of companies who are seeking such dispensation.
But sir, the MSME dispensation, say, of the 100 crores which came through, I mean, that these were for the last quarter's dispensation, right? So this quarter also we have given dispensation of, I think, 60 odd crores.
I think it has come down to 50 crores. Yes.
So would it mean that this 50 crores is also going to slip? I mean, I'm just trying to understand that, a dispensation given because of a certain factor, right?
No, the point
had it not been given, it would have slipped last quarter itself then. I mean, is that the right way to look at that?
I don't know. I mean, because what I'm saying is I should not say that about the companies who are seeking that dispensation. But at the same time, the experience is not very positive. It's not a fully positive experience. There is slippage coming out of that. But maybe from the 50 crore, it may not be that much is what I perceive. But anyway, it is only, I mean, when we look at transaction, the volumes, I am told that this would be slightly better. But again, we are assuming that, these dispensation cases may be weak cases, basically.
Okay. So, one more thing. I mean, last quarter we did mention that almost 21% of the corporate book is BBB and minus or below. I mean, the experience with your peers, etc., has been that the BBB minus is the one that has usually seen the largest slippages coming through. So far, in the commentary, we did mention that they are still standard, very much standard assets, so far. But having said that, given that these are all BBB minus kind of a stature, when you give a guidance of 600 crores, what is the percentage of slippage that you're factoring in from this BBB minus category?
It is not from the BBB minus category specifically. As I mentioned, it's BBB minus for us, but it is not by the external rating. It is by external rating, it is not 18%. We have not given that. Okay. So it's around 9%. 9% is the number.
Correct, 9% of the overall book.
Overall corporate book. That is 25 crores and above.
Right, but last quarter it was around 21%, right? Last quarter con call you had mentioned that.
Exactly. That also carried the same external rating. Only this time we are explaining that when you say 18%, that is by the internal rating of the bank. And if you look at the third party rating, it is 9% at the moment. So there is significant quality about the account. It's not as if, we have put it as, BBB and minus and therefore it is weak because they are already carrying an external rating which is superior to that. At least 9% of that.
Got it. So the balance 9%, which is let's say closer to around 1,800 odd crores for you, right? Which would be under the BBB minus. So you're factoring only a very marginal component of that actually having a potential of slipping here. Because that's not been the experience with other banks where, BBB minus typically falls under the watch list and slips down. So I'm just trying to get more granular on the 600 crores incremental guidance that you have given.
600 crore is on the basis of, our analysis of the accounts. And we have whatever cases, wherever there is visibility of stress, we had to necessarily make it in B. We decided to do that. We have done that cleanup on that side. Now, the accounts which are there, which are going into SMA2 or which are having cash flow issues, we have considered that. And many of them are arguing that, they will be able to come out of it. But at the same time, we are taking a view that some of them may not come out, and that's the way we have worked out these numbers.
Okay. So what percentage of your book would be SMA2 currently?
That data is the one that I have not shared. I will find out whether it can be shared, then we will share.
Okay. So coming to the...
But it is not a very, very high number. That's the only thing I can mention.
Okay. So coming to your, the recovery of 500 crores that we are guiding for the next 3 quarters, could you show some light, from where is the visibility of this 500 crore coming through? I mean, any particular sectors or any particular accounts which have slipped where you are getting...
the empirical evidence of last 3 years. Last 3 years, if you look at it, the recovery would have been in the range of around 350 crores, maybe slightly more in some quarters, etc. Now, that was a time when the NPAs were certainly not this high, one thing. Second, the NPAs were largely from the large corporate sectors, where practically nothing can be done by our own recovery department. So, today what we are talking about is the MSME slippage, agri slippage, or other retail slippage, or relatively small corporate slippage. These are cases where the where there is an action that can be taken by the bank and there can be result coming out of that, which is a much more controllable thing. And we are not talking again about doubling the number from 350 to 700. We are saying it is only 500 crores because there is a target given to the team before this particular, event of default, etc. Before that itself, this was the beginning of the year, this is a target given to them. That is the number I am talking about.
Okay. Great. And sir, just a final clarification. When we said that, the full impact of the 25 basis point increase in MCLR would come through in the next 6 months' time, here when the NIM's guidance of 2.8 that we are saying should be the exit rate, right? As compared to the 2.85 average for the year that we had guided earlier.
Absolutely, because I am not saying that it will happen immediately, because there is a slack of 6 months in any case. Because many of the resets will happen only some of them will happen only in the last quarter, some of them have already started happening, that is true. But it would be more appropriate to consider it as the exit one rather than exactly on 6 months today.
Got it.
Thank you. Ladies and gentlemen, due to time constraint, that was our last question. I now hand the conference over to the management for their closing comments.
So thank you very much. Thank you very much for your very active participation. There are some areas where you have asked for more clarifications. Definitely, our investor relations department will definitely respond to all those things. And any other clarifications, anytime we are open to give all the data also offline. So thank you very much for the participation. Have a nice day.